Hello, and thank you for the invite. I'm glad to be here with you today. So, for the ones that don't know the Signal Group, we're based in Athens, London, a little bit Singapore in the US. We have three entities, Signal Maritime, that runs two pools on the tanker side, Aframaxes and MRs. Signal Ocean, our tech company, and then Signal Ventures, our investment arm that looks at investing in other startups within the ecosystem. I'm struggling a little bit with this, but I'll get there. So today we'll talk about the market. We all saw that the market has been volatile the last couple of months. The situation in Russia and Ukraine has a direct impact on both tankers and dry. My focus will be tankers and dry for today, and especially on the spot side. So how the fundamentals around supply, demand, congestions are having an impact on the spot market. We will touch upon decarbonization, since these changes in trading patterns have a direct impact on CO2 emissions, and since this is top of mind, especially 2023 going forward. So what we can see in the next graph, next slide, is that the dry market has definitely seen a rebound the last couple of weeks. Unfortunately, shipping has a reverse correlation with bad events, wars, etc. So that had a direct impact on the market. The same we've seen for tankers, though the recovery has only lasted a small period of time, on the dirty side as well as on the clean side. So the clean side also shows a small spike that we see here, but it's a bit short-lived. Why? But what about the fundamentals behind these numbers? Congestion has been driving a lot the impact on freight. The last couple of months, we've seen an increase in congestion across the world, but mainly focusing on China. And both the tankers and the dry market had a significant impact because of congestion. Why congestion is driving the market upwards, for the ones that are not familiar with shipping fundamentals, is basically because a voyage becomes longer, and therefore the vessel is taken out of the market for a longer period of time. So congestions in China had a direct impact on rates, and they're still staying on the high side. Congestion has a direct impact on supply. And here we will look at a few graphs around supply, try to understand if the vessel supply is on the high side. We're starting with dry, and actually the dry supply is healthy. It's at healthier levels based on, compared to last year, compared to the year before. So it's a market that has the right drivers to maintain its momentum. On the tanker side, though, when we look at VLCCs, unfortunately, the number of vessels in the market stays high. Even when we have short spikes, and the market reacts quickly, but overall, the vessel supply for Vs is really on the high side. And even if at local markets, for example, Suezmaxes in West Africa are doing well as we speak, but that if you don't have the VLCCs on the right side of supply, it's really hard to maintain this momentum, because at the end of the day, a VLCC is 2 Suezmaxes, 3 Aframaxes. So if you don't maintain this momentum on the V side, it's very hard to maintain a healthy market. And I think that's why we also saw the spike not having such a big impact on the freight rates. So the question is now, what happens with the ocean cargoes? And which is the segment that will probably have a bigger impact? I think this slide, for the ones that are not that familiar, shows you that MRs, for example, are the ones that have a potential to have the highest impact because of the Russia situation. Because what we see here is that both on the dirty and the clean side, this is the market that has the highest % of exports driven by Russian ports. So it's going to be the segment that we will be looking at in more detail, because basically this is the segment that is driving Russian exports historically because of restrictions at ports, etc. So VLCCs that we were looking at before do not really trade with Russian ports because of the trading patterns. So it's going to be interesting to understand how this will play out in the next coming months. The same applies for dry, if we go back to the previous slide, where basically the smaller vessels, so Handys, Supras, and Panamaxes, are the ones that will have a biggest impact in terms of trading patterns because of Russia. Capes, less impacted, of course. And if we look at the ports, the west part of the world typically is the one that will be more impacted of the Russian situation because Primorsk, Ust-Luga, Taman, Novorossiysk are the ports that are typically driving the biggest number of Russian exported cargoes. So all eyes are actually in the Black Sea, in the Baltic, to try to understand how these volumes will be replaced, who is going to take care of these volumes, what will mean for these vessels in terms of their next employment, et cetera, et cetera. So this is the same situation on tankers, which says exactly the same picture, that, again, it's more of a West problem, since the volumes out of Kozmino, for example, are significantly lower. So what people are looking at in order to explain how this impact will play out within the next coming weeks and months is actually the number of vessels that are leaving the Med region. So this blue line is basically the number of vessels that are ballasting out of the Med, which is something on the dry side, which is something that historically has not happened before. These vessels stay in the region, they do Black Sea trading, East Mediterranean trading, but now they're going towards Brazil. Till now, the Brazil market on the dry side can support this incoming supply of vessels from the Med, but the big question is, like, for how long? This is something that typically doesn't happen. These vessels stay in a local market. So if there is one thing to monitor the next couple of weeks is what the impact of additional supply will be for the Brazil market. And then if we move back to tankers, I think all eyes are on MRs, trading clean primarily, because Europe is actually the primary importer of Russian products, gas oil and diesel. So countries like France, the Netherlands, Germany are actually massively importing from Russian ports. So the question here is, how are they going to change this pattern? From where are they going to take products now? From Arabian Gulf, from the US. But that will mean that the ton miles, so the demand for transportation, will increase, because a voyage that before was taking 10 days will now potentially take 30, 40 days. So I think MRs will maintain the high rates for a while, because we expect to see a significant increase in ton miles. Last but not least, bunkers. So even if people make more money because of freight rates, bunkers have gone crazy the last couple of weeks. You guys, some of you are buying bunkers, so it's important to take this in consideration. So even if freight rates theoretically have gone up, the bottom line, especially on the tanker side, has not changed significantly, because the cost for bunkers has really gone up. So we won't finish this discussion without touching on decarbonization, and a lot of our panelists earlier today mentioned that the fleet will not be renewed and will not change within months, within years. It will take a long time. So I'm bringing this slide just for reflection, because the industry is used to adjust speeds, for example, or triangulation. Speeds is something that whenever the market is not favorable, operators know how to slow steam. And one knot of slow steaming for the whole, let's say, tankers fleet can save up to 2 to 5% on decarbonization, so on direct impact of emissions. So before we think of the long-term solutions that will take time, there are things that we can do today with slow steaming, with triangulation. Of course, not all vessel classes can triangulate. A VLCC will 80% of the time do Arabian Gulf to China, but Aframaxes, MRs, have a high percent of triangulation. And therefore, if we deploy our vessels in a smart way, there is a potential to do a lot of savings without necessarily changing the fleet, which is something that, eventually will happen, but it will take time. So this is something that's to keep in mind when we think about collaboration and teamwork and decarbonization being a sport game for a team, the idea is to also keep in mind that you can avoid certain emissions by adjusting the trading patterns, the speed of existing assets the right way. So if you have, I've been fixing Signal Maritime ships for a couple of years, and on a Friday evening you always have the decision to make when you have a vessel, let's say in the West Mediterranean, am I ballasting her towards the Atlantic or am I fixing a local cargo? And that decision till now was for free. So it was just a market decision, just a spot decision, and nobody would get penalized for this extra ballast leg. I think now this decision is not for free anymore, at least from 2023 onwards. It has a price, and as an industry, we have to think of easy ways to adjust. Thank you.